All right, so welcome to another video. Today we're going to take a look at Costco. I'm going to give you a little insight on how you can go ahead and sell some premium on it and give you a little bit of technical analysis behind it. Keep in mind, none of these are recommendations to buy, sell, or trade stocks, just my own personal opinion. And if you want to grab my opinion, you can do so at the Traders Fly website. Go to the freebies. There's a ton of freebies there. You can go ahead and download a bunch of them. You can also check out some of the classes we've got going on, and you can also join the Discord group where I post some stuff on the current charts, markets, and that kind of stuff. Okay, which is basically like a chat room if you're kind of brand new. It's kind of like, hey, we don't chat a ton, but there's, a little handful hints here and there. If you have questions, you can always ask me in there. All right, let's kick things off. We're going to go in and take a look at Costco here. Market is down quite a bit. So what I want to do is just evaluate Costco briefly, and I've done more of the technical analysis on my other channel at Critical Charts. You can see that. But what we're looking at here is Costco's got a little bit of a pullback. And with this little bit of pullback, overall, this stock has been doing fairly well, moving to the upside. So any dip, let's say, we kind of want to look at buying the dip if you're a long investor. So when the market pulls back and we have a lot of, big VIX that goes down, we always want to look at, hey, you're like buying the dip on the long side. So just like a long investor buying the stock when it dips, that's what you're kind of looking for. So Costco overall, if you just look at the trend, I mean, it's just been going, just take a point from the past here and then take a recent point. What's the trend? Boom, there it is. Simple enough. So we could do something like this and we could say, hey, let's buy the dip because we know with time, it's been kind of going up. Now, the thing with a scary market, you want to usually go longer duration because volatility is high. So we want to give ourselves more room. So if I'm looking at Costco, I could go even 105 days. I could do 49. If you're a little more aggressive, there's nothing wrong with 49 days. You could go in with, though, let me just kind of ease the worries of some people. Let's go to 105 days. And now what I can do is go about a 15 delta, which 15 to 20 delta. This gives me about a 15 or 20% of probability in the money, which means if I'm a seller, about 80%, right? 20% in the money, 80%, minus 100, that kind of thing. So right there, 450. So if I go in and sell a vertical right here, so we're just selling vertical puts. And now what I can do is 450 and 440. I've got myself a spread. You can see I kind of mapped it out a little earlier. So I got kind of this spread right here. And now what this does is give me the range of that stock. If it falls below 450, I will own that stock at 450. So let's say it goes to 430, I will buy that stock much lower, more than 10% below that. So for it to go lower now at 450, I will own that stock another 13% down. So look, if you were saying, hey, I like Costco a while back, and now you're saying, well, 450 is not a bad point. If you said, hey, last week, anytime in the last 2 or 3 months, if you said you like Costco, 450 right now is a steal, right? Because you're getting it back when it was breaking out over here. So from a long investor standpoint, you're getting it way down here now. But if it stays above that 450 level in the next 100 days, you get to collect the money or the premium. In this case, that premium is $1.75 or $175 because options trade in lots of 100. Okay. And you're putting up a risk of $825. So you're risking $825 to maybe make $175. So this is kind of what we're going to do. I'm going to go ahead and do that 2 times. So we've got 2 contracts in there. And you can see price move now to 170. So this is my way of kind of like, okay, let me get started here and get this put on. And now I'm going to go ahead and pop it in here. Okay. So there we go. I'll pop it in. All right. And now as I get that in, okay, let's say you're super worried about it. Well, what you could do is actually just also sell one on this maybe other side over here, if you like, kind of on the call side. Let's go 570 because there's no 10-point strikes elsewhere. We could also go here and do one on this side. And what that would do is slow things down. So let me push this Costco order in a little bit more. I might have to, be more aggressive with it. And just to show you what that'll look like. Okay. There we go. And then what we'll do is we'll put this other one on right here to slow it down. And I've got a delta then a still 1. So I'm still being more bullish. I'm still, hey, long invested. I'm just cautiously bullish. And I still got a short Vega, which means if it goes up, I get to make some money. I get to make some money from theta. And depending on your ratios that you're looking to have, you could actually do maybe 3 contracts on the put side and 1 on the call side, right? Just depending on the strikes. So I'm going to put another one in right here. We'll see if we can get filled on these, and just to show you what that'll start kind of looking like here. There we go. I got some filled. And then we will try this one a little bit more, press that order, see if I can get filled on that. So I've got, there we go. So now I've got kind of like a 3 ratio spread. Right now I've got 3 puts that I've sold, trying to make about 485 on 2,515. And then what we'll do is we can add another spread, just a single one, at about 575.80. So this way, if it pulls back, okay, I'm not taking as big of a hit. So 2,263 would be my max risk versus without it, 2,500. So it cuts my risk down by about this 252. So take a look here. 2,515 is the max risk without it. If I add that in, then I'm risking 2,263, okay, down here. Okay, so you're still long deltas, about 3 shares, but without it, you're long about 7.9, so almost 8 shares to the upside. Now remember, you're also collecting some money in premium from the theta and time, and by adding the second one, that picks things up. So you're adding a few thetas, so now you've got 3.59 thetas versus without it, 2.6. So there we go. So putting on a spread like this now gets you a little bit more long exposed, but you're still a little bit cautious. You're saying, hey, I'm a little cautious about it. I don't want to be all vertical puts. I want to hedge a little bit. And this kind of just dips your toe in a little bit. And by going longer duration, it also gives that stock much more range or time to actually pop higher. Now you could put this call side on, let's say, in a week or 2 if the stock pops, and that way you're being a little bit more directional. So give it time to kind of move up and then do it. But in this case, I'm just going to do it together to show you the plan and concept of how you might approach that. So this is kind of like putting on a little bit of a starting out position, just to get things going without being too aggressive. Like rather than being too aggressive into it, you're kind of starting it out and you're saying, hey, I'm bullish, but I'm not super bullish. I just want to get started. And now you'll let the theta kind of work, the negative Vega work, let those things kind of get in there and start working that trade a little bit. So that's kind of what you're doing in this strategy and setup, just to kind of dip your toe in the water. Because remember, with a higher VIX, you get much more range, you get more credit, and you're, in this case, going way further out to June to let that stock, to give it time to kind of move in your favor or move in that direction. If you said, hey, I don't want these extra calls, you don't have to deal with them right now. You could say, hey, well, when that stock pulls back to maybe 500, if it can't hold the 500, then I'll add them in afterwards. So that could be another way to kind of look at it and play it. So anyways, I hope that helps, gives you a little insight. Check out the Discord channel where I share with you some trading tips and tidbits. And then you can also grab some great freebies on our Traders Fly site, or even attend one of the live classes that we've got going on. So I hope to see you there. Thank you so much for joining me. Enjoy the rest of the week ahead, and I will see you next time.